Thank you for joining us today for Jumpstart Your Credit IQ, a guide to increase your credit intelligence and success workshop. My name is Tara Jensen, Program Manager for the Tools for Life Learning Center by Loudoun Habitat for Humanity. And joining me today is valued Bank of America's champion and community market leader for Prince William Market, Alex Figueroa. Thank you, Alex, for coming and joining us today.
Thank you, Tara. Thank you for having me.
Yeah, it's always a pleasure to see you. I know you've done quite a few of our in-person workshops, and I always walk away with some amazing tips to improve my own personal financial wellness. So I'm really thrilled to be here and learn from you even more. We do have some goals for today, determining how credit scores are calculated and discover tips to rebuild your credit. We really want you to leave today with some actionable items on how to recover from this financial season. I think with that, Alex, I'm going to turn the floor over to you so that you can get started on sharing this great information. I will move the slides for you, so just let me know whenever you're ready to move on. Okay?
Absolutely. Well, thank you again, Tara, and big shout out and thank you to the Loudoun Habitat for Humanity for having us. As Tara explained, I'm Alex Figueroa, the consumer market leader for the Prince William area, really encompasses part of Fairfax and all the way down to Fredericksburg for Bank of America. So I live in Loudoun County, so this is my personal home. So I'm really attached to the Loudoun Habitat for Humanity. So thank you again for letting me be here and share some vital information for us all today. As Tara stated, we want to talk about what the goals are for today, and that's really talking about credit scores, how they're calculated, what they are. What is a credit score and what makes it up? And of course, discover tips to even rebuild our credit. And this is really great for all of us, no matter the situation that any of us may be in, whether it's a high credit score, medium credit score, low credit score. It's really good and vital information to know how it works and then tips on how to increase it, no matter what level in the credit score you are. And as the old saying goes, unless you plan and are the richest man in the world and can pay for everything in cash yourself, it is vital to have a good credit score, as it'll be needed for things that you want to have in your life and through your personal well-being. So really looking forward to the conversation that we can have today. I'd like to get started to just get right to it and talk about the credit score itself and how it's calculated. Obviously, there's a range of scores, and it can be anywhere between 350 all the way up to 850. And some credit bureaus have different scores. Some go a little bit higher, some go a little lower, but that's the rough range, 350 to 850. And as you can see here on the screenshot that Tara's sharing, the national average is 695. A 695 is the national average score. This was as of August 2015, but of course the credit bureaus are always updating, and it still kind of falls in that line. Actually might be a little bit lower based off some of the circumstances that have happened. But still between that 680 and 695 range is what an average is. And that would be considered a good credit score. It wouldn't be on the excellent side, and we'll talk about some of those differences, but it certainly isn't on the poorer side either. That is the national average. But let's talk about what makes it up and how it's actually calculated. So if you see the chart also that's on here, you'll see that 35%, the biggest chunk of what calculates our credit scores, is payment history. So the old saying goes, once you have a bill, pay it. That is the most vital piece and most important piece to ensuring that your credit score stays maximized. And if you can go back, Tara, I'm sorry. That's the most important piece to make sure that our credit score stays maximized in the range that we want it to be, is that payment history. 35% encompasses that. You'll see the next highest amount of what determines our credit scores is amounts owed. How much do you owe back? 30% of the score is calculated through that amounts owed section. And this is also very important. You'll hear, and we'll talk about it a little bit later as well, you don't want to max out on credit cards. You don't want to buy things that are stretching your budget and things you can't afford. This is important because you want to be able to make sure that you're maintaining a good, healthy balance between what you actually have to pay back and that it falls in line with your income and budget. You don't want to go too far over, and that can impact your credit score the more you owe. The next piece you'll see here is the length of credit history. So that's 15%. And we'll learn some things later on how to keep your older balances or older credit lines open, because that length of credit history is very important to your credit score as well. You're showing the bureau and you're showing anybody who's looking at your credit score that not only have you maintained credit recently, but you've done it for a long time. And that's very important too, to make sure that you have a top credit score. The next two are about a 10% range, and you'll see it's the types of credit in use and new credit. So the types of credit in use would be, there's three differences. There's installment loans, which would be like a mortgage or an auto loan, even a personal loan that's not revolving. That would be a loan that somebody gives to you and you have a set time to pay it back. It's on an amortization schedule, and when you pay it back, it's finished. Those are really going to boost your credit score the most because you're showing that you can pay back that installment loan. The other types of credit in use are revolving lines, which that would be like credit cards or even home equity lines of credit. These would be credit lines that you only use what you pay for, and when you pay it back, you can reuse again. So that's the two types of credit, and that's 10% of roughly what your credit score factors. And then the last piece here is new credit. Any new credit that's established is highly looked at from a bureau standpoint, because they want to ensure, hey, you just opened this. How are we going to be at repayment? We don't have a history on this type of credit yet. So making sure that you obviously, going back to the first part, which is payment history, paying your bills on time is certainly the most vital, but making sure that when you have that new credit, you quickly establish yourself as in the repayment process. That's roughly how the credit score is calculated in a nutshell. There's not an exact science. There isn't a, you do this, you'll get this number. But this is a rough outlook on how that's actually calculated and what the Bureau is looking at on a day-to-day basis. Tara, you can go to the next page. So we talked about this a little bit and what makes up your credit score. And again, it's that 3-digit number. But the one things that I want to add on here is, of course, it can always change. Any of these factors can change your credit score month over month. So that's good if your score is on the lower side, because that means that we can take steps to improve it. And we can learn about some of those things today, and we will. The opposite is true if your score is on the higher side. So if you're in that 700 factor and something there's a slip up, it can knock it down a notch, especially in one of those factors we learned about. So scores can vary depending on the information that's available, and it could vary from credit bureau to credit bureau. There are 3 main credit bureaus that most banks and financial institutions look at, and that's Equifax, Experian, and TransUnion. Those are the 3 main credit bureaus. And again, that score can fluctuate between the 3 just based on the factors we learned earlier. You can go to the next slide, Tara. So now that we've learned exactly what makes up our credit score, what it is, and how it's calculated, let's talk about tips to rebuild our credit. And rebuilding, again, can be for anybody, no matter where in the spectrum you are in your credit score. If you're in the 700s, maybe you want to increase to 800, have a maximum excellent credit score. Or if you're in the lower 400s, that's okay. There are things that we can do to get back towards that 700 range. And as you can see here, it says life can throw you financial curveballs. But if you find yourself chronically late paying your bills or defaulting on loans, you may be damaging your credit rating. And that can raise the interest rates you pay. It can limit the ability to qualify for new credit. However, that damage is not irreparable, as we've said. Then these are the steps that we can take to rebuild that score. You can go ahead and keep going on, Tara. So the first step is what I tell everybody is, if you're looking at, hey, I want to know what my credit score is and I want to know how I can improve it, no matter where I'm at. First thing to do is make sure the report is correct. First step in repairing the credit is to make sure it has no mistakes. Your credit score is based on this report. We want to fix any errors to avoid being penalized. If there's a collection on there that may not be ours, if there's a line item that we say, hey, I don't have this credit card, this isn't me, then we want to alert the credit reporting bureaus and the lender that reported that incorrect information. It's not even something that if it's not ours, it could be a situation where you have a mortgage, that is your mortgage, but they're reporting you're late and you know you weren't late. Work with the lender and make sure that that credit report is accurately updated. This is very important to make sure that you're on the right steps to getting your credit where you want it to be. but also to fix any errors that may be in there. You can pull this credit report on your own. There are so many websites available now. All of them are pretty reputable. I mean, I know there's creditkarma.com, annualcreditreport.com. Most every financial institution makes credit reports available now based on your relationship with the bank. But there's many avenues that you can take to pull that information. If you pull your own credit report, it does not hurt you in any way. So the first step to rebuilding any credit, no matter where you're at in the credit score, is to ensure that that credit report is correct. All the information is true. These are the line items that you pay for every month, and that everything is accurate in those line items. You can move on to the next slide, Tara. So the next step I always tell everybody is if you're behind, well, what do we need to do? We need to catch up. So we pulled our credit report. We know that, hey, we might be behind on some payments. We might have gotten past due in certain situations. And listen, life happens. That's certainly understandable. But if we're talking about rebuilding that credit score, before we talk about opening any new lines or what will work best to improve my credit in terms of opening something new, first thing we need to do is play catch up. We need to ensure that everything that's currently being reported for now is up to date and paid on time. And you'll see here, the credit report calls out missed and late payments from billers such as credit cards, mortgage companies, and loans. Those lower your score. Nothing will lower your score more than having a missed payment on any bill. Bring all your accounts current by covering those back payments as quickly as possible. If you have trouble making payments, contact the creditors, especially now, and ask whether they will consider working with you to adjust your payment plan. Before all else, we need to become current. And as the tips here state, do this as quickly as you can. We're going to set budgets, sticking to those budgets and knowing what we can afford to get caught up. If it seems a little daunting or just quite frankly, this will take a very long time, call your creditors. A lot of creditors now, and especially in the case that we're running in with the COVID environment that we're in, a lot of creditors are working on repayment plans and payment plans where they can make a monthly payment for you to get paid and caught up on time. And that will quickly increase your score, not remaining past due. So number 2, if you're behind, let's catch up. Very important. On to the next slide. And from now on, so let's say, and see, from now on, be on time. We've checked our credit report. We know it's accurate. We know everything's up to date on there. We saw that we were behind on some things and we know we need to catch up. We've gotten into a payment plan. We set our budget and we were able to not be past due anymore. The next step is be on time. From now on, we certainly want to ensure that we make those payments timely and appropriately. You'll see here, on-time payments, they're one of the biggest factors in calculating your credit score. If you have trouble remembering to pay bills on time, listen, I've been guilty of that myself. Schedule the automatic deductions with your bank for regular expenses, such as car loans. Set up reminders for credit card past payment due dates. Most institutions offer an automatic deduction, and a lot of institutions will even work with you on due dates once you're caught up. If you know that your budget falls in line with a certain due date or your paycheck, set that up. Set up the automatic deduction. That way you can ensure, A, you're budgeting correctly and sticking to it, not spending more than what you need for what the budget you've created for yourself, but also to ensure that you're on time with those payments. Remember, credit payment history is the #1 factor in a credit score, and showing that you're on time is going to increase that credit score. We can move on to the next slide. Number 4, so we're on time. We obviously have checked the credit report and we know that there's no discrepancies. And so now if we're looking at, hey, well, what can I do further? I'm on time, I've caught up, there's nothing on here. Is there something that I can do to increase it even more from a capacity standpoint? Capacity meaning additional credits that you can get credit for. Well, if you don't have much credit history, consider a secured card. A secured credit card can help you build that score. Secured card typically requires a cash deposit that serves as the credit line, so it's secure. Just like a mortgage, instead of the mortgage, it's secured by cash. You use the secured card just as you would a traditional credit card. But if you default on paying your bills, the issuer can keep a portion of the deposit needed to repay what you owe. A good track record on a secured line of credit can help you get unsecured credit card down the road. The reason I like this a lot is when we're trying to play catch up, or if we know, hey, what can I do to establish something? Because I know I might not be able to get approved for a credit card initially. This is a good option because it works just like a credit card, and you're going to get credit for every time you make payments on it. But number two, if God forbid something happens in life where we know, hey, I just can't make this payment this month, the cash is there to secure the debt. So we're able to use that cash to make payments. So it's kind of a win-win situation in terms of making sure you don't fall behind, but it's also a win-win in terms of if we do make payments, it's going to boost up that credit score. And as you can see with the last line here, it gives us the opportunity to open up unsecured credit cards, which certainly can boost the credit score as well when used appropriately. On to the next slide, please. The fifth thing that I like telling everybody is to keep those old accounts open. So in general, a longer history is going to mean a higher credit score. Remember what we talked about earlier in terms of credit payment, length of credit history, excuse me. It's a 15% measurement of your credit score. So closing those old accounts may have a negative impact, since scores consider the age of your oldest account, as well as the average age across accounts. So if you have an old account that you don't use often, you may need to use a card occasionally to prevent the issuer from closing the account. Work with the issuer on that. But just be sure to pay the bill on time, of course. And make sure none of the accounts charge annual fees. There's no reason to pay an annual fee, especially if you've had a great length of history with a creditor. But again, keep those old accounts open. That length of credit history is certainly going to benefit you whenever people are looking at your credit score. And not just from a score perspective, but anybody who's looking to extend you credit. It certainly is a plus for you to say, hey, I've had credit for X amount of years, and I've shown that I know how to maintain it. It certainly is a big boost. I think, and perfect. We do have, at number 6, wait to apply for new credit. Credit inquiries lower your credit score, so avoid making many inquiries about new loans and lines of credit. This includes opening a new store card to get a discount on a purchase. If you do not need to shop for a new loan, do your comparison shopping over a few days. That way, raters may count the inquiries as a single event. Rest assured, though, that checking your own score doesn't count against you, as we stated earlier. So why do we say wait to apply for new credit? Again, it does go back to multiple inquiries, excuse me, can decrease your score because it's showing the credit bureau, hey, this person's trying to possibly obtain a lot of new credit, and we don't know how they're going to react to all this new credit. So let's take some precaution and just lower that score to make sure that everybody's aware. That's why we tell people don't do that. The good news is if you're shopping for like a car, you do have a 14-day window, where as long as all those credit inquiries for a car specific, you can't go to like JCPenney and then go to the car lot. That's going to be 2 inquiries. But if you just went and focused on car loans, for example, you do have a 14-day window where it would only count as 1 inquiry, as it states here. It inquires as a single event. So that's the good news for us, because I know sometimes, hey, we all want to get the best deal if we're shopping for a new car. But if you're looking to boost that score, and you've done the 5 steps before in terms of a secured card now, and you've checked your credit report, you know it's accurate, you've played catch up, you're paying on time. If you don't need the new credit, wait. That's going to boost your score because you're showing now, hey, I'm maintaining the debt that I do currently have. That might be the last slide, Tara. So wrapping up just the slide portion of this, of course, knowing your credit score, so important. If you haven't already pulled it, pull it. Again, annualcreditreport.com, creditkarma.com. Most financial institutions offer free credit reports. Check with yours. Make sure you know what that score is and check it to be accurate. And then tips for rebuilding your credit. Make sure that credit report's correct. If you're behind, catch up. Let's create a plan. Let's create a budget. Let's know what we can afford to chunk away at us getting behind, and we can get caught up. Our credit score will never increase if we're currently past due. And then from now on, once we get caught up, be on time. The most important piece to your credit score, 35% of the factors, staying current and on time. Consider that secured credit card when we want to establish new credit. It certainly can help boost, and it's a nice way to ensure that you always make payment because it's secured by cash. And keep the old accounts open. Of course, we talked about that and how it's vital to the length of history. And then wait to apply for new credit. If you don't need it, let's not get it. Let's only use what we need. There's an old joke saying, hey, I got the best financial tip for everybody here. And it's don't buy what you can't afford. One sentence. Wait to apply for that new credit. We don't always need to get the best deals, the best rates. The more capacity we have, the more times we're applying for credit. It's just, it can't hurt the credit score. And if we're trying to boost it up, we want to stick to paying the payments that we have on time.
Alex, thank you so much. Let me get out of sharing my screen and come back and join you. There we go. Hello again. Thank you so much, Alex. That is so much useful information. I do have some more questions for you if you've got some time with us. In regards to tackling some of these high credit card balances, you know, and paying them down, what are some methods that we can use?
Yeah, that's a great question. You know, to me, there's two different style of methods, and you really need to know where you are in terms of your spending and paying habits to know which one's right for you. And I'll kind of vaguely touch on them, but I highly encourage everybody to go to Better Money Habits. You can literally Google that, and you can get all of this information. It's going to talk about the two methods I'm about to share. In addition, it is on our website. I work for Bank of America. You don't have to use Bank of America at all. All the way to the right, it says Better Money Habits, and you can get this information as well.
I can attest to that because it's a great website to go through, and it covers so many financial topics. So I do highly recommend it.
Yeah, absolutely. And it's not, the Better Money Habits is not even Bank of America affiliated. It's actually run by the Khan Academy, who works with Harvard University. So it's a fantastic website. But the first one is the high rate method. And the high rate method is really just that simple. The credit card or whatever balance that you have that you want to get paid off, choose the highest rate first. And so what that means is if, let's say you have 5 credit cards, you want to tackle the highest rate first. You're going to make the minimum payment for all 5 credit cards. And the money that you've budgeted to have left over to make for payments to chunk away at these debts, you want to put it all towards the highest rates. And so the reason for that is, A, you want to not pay the highest rate of interest as quick as possible. You want to get that card paid off because it's charging you a lot of interest. Once that card is paid off, then you certainly can move on to the next highest interest rate. The con, not a con, but the drawback to this is it can take a longer time to see immediate impact. So usually the one with the highest rate is going to take a little bit longer to pay off. You'll save more money in the long run in terms of your pocket. But if you're looking for immediate satisfaction and seeing things pay off just at a quicker pace, not necessarily from an interest standpoint, you might want to use what's called the snowball method. And the snowball method is you want to start with your lowest balance first, no matter the interest rates. And so it's the same method in terms of you'll take all 5 credit cards and pay the minimum monthly payment towards each. And then whatever your lowest balance is, the extra funds that you've budgeted to get your debt paid off, put it all towards your lowest balance. The reason the pros to this one is you'll see some immediate satisfaction of, hey, I've paid off a credit card. Because it's going to pay
quick rewards.
It's quick rewards because you're actually, it's a lower balance, so it'll pay off faster. The con to it is you'll still pay more interest in the long run because you're not satisfying the higher interest. Neither is wrong. It's just deciding where you're at in your budget and your payment habits. I personally, to get out of debt, use the snowball method because I like the encouragement. It kept me going of saying, man, I got that card paid off. I got that card paid off. So I liked it. But that's usually what we recommend. And again, you can get full details and videos at the Better Money Habits. And just if you Google literally Better Money Habits through the Khan Academy, you can see all these steps and how it works.
Okay, so let me just recap. It was the snowball method and the
high rate method. The high rate
method. Okay, high rate method and the snowball method. Great, thank you. I think you touched on this a little bit earlier, but I wanted to elaborate a little bit more. What resources are available right now for credit assistance or relief during this pandemic time?
Yeah, the unfortunate thing, with what's going on is, a lot of us, quite frankly, are just in a different financial position now. So how we're paying our bills and how we're managing income is really trying for a lot of us. So the good news is a lot of institutions have really stepped up in terms of offering credit counseling, debt forgiveness, debt repayment structures, making sure that your debts can be paid at a later time to give you some stretch room. So this is what I usually recommend to people. I have kind of 3 direct solutions I think I can offer. One is what's called credit counseling services. They're out there. There's so many institutions. I don't have one to recommend per se, but what they do is the con to it is it's like the next step towards bankruptcy. So you might be showing on your credit report that you did a settlement. So I only recommend that for those that really truly need it. I physically can't pay this debt back. It's not that I can't rebudget. It's not that I can't cut back on expenses or maybe even change a lifestyle. I physically can't do it, but I can't qualify for bankruptcy. Credit Counseling Services, CCS, you can Google that as well. They're there to basically settle debts for you and come up with settlement packages. That isn't a solution for some people. Again, I would only do that if you physically can't make a payment, because it will go on your credit report as a settlement. And remember, we talked about building your credit score, and that certainly wouldn't do that. The next step is every credit union and bank through the Community Reinvestment Act is required to work with individuals on credit counseling. Now, that doesn't mean that there's a credit counselor available at any bank or every credit union that you walk into, but you certainly can request an appointment. And what that does is they can sit down with you. They don't necessarily have a plan per se like credit counseling services, but they can help create a budget. They can help possibly, if it's your financial institution that you owe back, can work with you on not defaulting on pay, but lengthening, the amortization schedule, so it gives you some month-to-month relief, which a lot of us need right now. So I would highly recommend just saying, hey, can I schedule an appointment? And most institutions will be able to work with you. Again, they're not readily available, but they can schedule that appointment for you. And then the last thing is to work with all of your creditors. Right now, in this COVID environment, I can't think of one bank or financial institution, knock on wood, that hasn't stepped up in some form of delaying payments, of creating new payment plans. And it might be frustrating to sit on hold for a little bit. I understand that because a lot of us are in need, but it's working. And I can tell you just from personal experience, we've been able to help millions so far people be able to delay their credit payments. So work with your institution. They're all doing that right now. And nobody wants to see anybody default. I'll even give you the bank side of it. It doesn't do us any good to have something default on. We lose money as well. So we certainly want to work with everybody. I'm not speaking for any bank per se. I'm telling you to go to your financial institution, your creditor, and they'll probably work with you.
I think that's a great place to start for anyone who's in this, who's being impacted right now by these financial times. So thank you, Alex. We appreciate that.
Absolutely.
I think that will go a long way with our community. So I do see some questions coming in from our chat. So Alex, I might read some off to you if that's.
Sure.
Okay. If you have a strong credit score but want to change your credit card company, how much of a hit will your credit score take?
That's a great question. My first question to you back would be, how long have you had that credit card? So if it's your oldest credit line, my recommendation would be to probably keep it, just to be honest. But if it's not your oldest credit line, I would say it's as easy as canceling the card and asking for it to be closed and literally reissuing the new card of your choice. I certainly know sometimes you may see, hey, that cash rewards card is the one for me. The one that I'm using right now, this one's better. I don't want to tell you to not use that. What I would say is if the original one you have is the oldest credit line you have, keep it open and reopen the new one. If you have a good credit score, it's not going to hurt you.
Right. Well, they chimed in, they replied and said 30 years. So Alex,
Well,
what's your
but
recommendation?
if it's not their oldest one, they still can do it. But what I would say to somebody with a high credit score is you can keep both. I think if you have a high credit score, it's not going to hurt you in terms of capacity. And I would use the card that is giving you the most benefit right now. That would be my direct answer. I would say if you have that strong of a credit score, strong meaning over 720, not going to hurt you to have both open.
Great, great, thank you. That's great advice. I'm just kind of waiting for a few more questions to come in, Alex. But in the meantime, what advice do you have for our viewers who are starting out with credit to kind of launch their credit history and things to look out for?
Those who want to say they're on the lower end of the credit score.
Mm-hmm.
Yeah, the first thing to do is obviously is to pull that credit, see what's on there. One thing we didn't touch on that I can touch on here is if you have collections, judgments, it's sensitive, but liens, things of that nature. Anything that's a public record, that certainly can hurt your credit score as well. I can tell you from a financial institution perspective, medical collections, we don't hold against you as far as trying to determine to get new credit, because we understand medical things happen, but it still hurts your credit score. So you may not get the best interest rate. So if what you're looking at is strictly increasing the credit score, you want to get those collections and public records paid off. They stay on there for 7 years at a minimum. So it would behoove you to really pay those off, in addition to all the steps we talked about in terms of getting caught up, paying on time. Paying on time is the number one thing. But the one thing that I think I can touch on to answer that question is if you're really strung out and things just don't seem to be going up and I'm paying my bills on time now, why is my credit score not moving? You might want to look and see if you have public records, because as long as you have those, it's still going to hold you back.
Okay, that's great advice. And can you you pull your credit report and you can find those, but
absolutely.
Okay.
Yep. It's the credit report's broken up in like 3 chunks, and everyone looks different. But the main part is your information with your credit score. The second part is your current credit report and your history. Now these would be things, and again, your like light bill's not on there, your gas bill's not on there. What will be on there is your installment loans that we talked about, mortgages, car loans, personal loans, and revolving line credit cards, home equities. That'll be the history that's on there. The second part, or the third part, I should say, would be that public records and inquiry section. The inquiries would be all the times you pulled your credit within the last year. So remember, multiple inquiries can hurt you because they take away a point or two every time you're doing that. And then the public records, which would show collections, judgments, liens, things of that nature.
Okay, so I assume that this is somewhat of a common occurrence. Where do we reach out, if we do see an error on our credit report? Where would we reach out and kind of alert somebody to let us know?
Great question. The first thing you'd want to do is get in touch with the creditor. That's the first thing. It's not the only thing, but that's the first thing. So if you see that there's something, hey, this is wrong, this is inaccurate, I'll use my personal experience. My mortgage company said I had a late payment. I have not paid my mortgage late. Okay, I've had late payments in my past, but I'm not late currently. And I know I wasn't paid late. It was an error on their system. Got in touch with the creditor, showed, hey, what's going on? They're like, you're right. I don't know what happened here. What they do is they get in touch with the credit bureaus and correct that for you.
Okay.
Another thing you can do, though, because sometimes I understand, especially when it comes to collections and some credit cards, it might be a little difficult.
Well, your story sounded like a lucky situation.
Right. That's
so in those unlucky situations.
So I understand it can be tricky.
Right.
Call the credit report. You can file a dispute with Equifax, Experian, TransUnion. Those are the 3 credit bureaus. You can file a dispute and a fraud claim, any kind of claim, with all 3 bureaus. What they'll do is they get in touch with the creditors. It's a formal process, and they get that corrected for you when in doubt, when indeed it is an error. The reason why I said to do the first thing first is it's quicker. So if the creditor will do that, you'll have your credit score updated in less than a month. When you file a dispute through Equifax or Experian, it can take up to 3 months.
Okay, that's good advice. I do have one more question for you. My credit card increased my limit. can I stop that increase to improve my score?
So the direct answer to that, to the first part, is can I stop that limit increase, is yes. You absolutely can call your creditor and say, I don't want this limit. The second part to that question is, will it increase your credit score? It depends. I know that's a very not direct answer, but the reason I say it depends is it depends on where you're at in your credit score. I will say this though, if your creditor is naturally increasing your credit limit, you're probably on the high end of the credit score spectrum, and it's probably not hurting you, just to be honest. But there is such a thing as capacity, meaning having too much credit available. So going back to the first part of my answer is you certainly can get in touch with the creditor and say, I would like my credit limit decreased. They'll probably try to talk you out of it, I'll be honest, but you can stick to your guns, and you absolutely can. You can request the credit limit that you desire.
Very good. Right, because you want that ideal utilization number, right?
Yeah, I mean, you don't want to be at what's called a high capacity. You don't want to have, and this is what I usually tell people, if you have, I recommend people have about 3 credit cards max. And if you have those 3 credit cards, the credit limits aren't going to hurt you. The problem with capacity entails when you have 10 credit cards. And that can happen to a lot of people. They have a Home Depot card, they have a Best Buy card, they got 4 rewards cards, a Discover card. Then the capacity can start hurting you as far as you just have too much credit available to you. If you're sticking to that 3 credit cards, I think you'll be okay, no matter the limits.
Great. Thank you, Alex. I think that is all the questions that we have here today. It has been such a pleasure chatting with you. Do you have any final tips or techniques that you want to share with us before we depart?
Just thank you so much again to you, Tara, to everyone at Loudoun Habitat for Humanity. I definitely like reinvesting in the community. Again, I am a Loudoun resident, so I'm very personally attached. The only tip or recommendation I could say is pay everything on time. Nothing is going to increase the credit score more than that. So if you're behind, catch up, pay up on time. If you're maintaining your credit, you're going to see your score increase.
Okay, that's great. And everybody wants that. On behalf of Tools for Life workshop series by Loudoun Habitat for Humanity, thank you so much for joining us today. Our workshops are free and here as tools to make your life richer and more successful. Visit loudounhabitat.org for past workshops and to find out what we have in the next coming weeks.